Hey, what's going on guys? It's Michael here. So today we're going to look at the 3 most popular investing apps in Australia for beginners, between CommSec Pocket, Raiz and Spaceship Voyager, and I'll start going through each one outlining the pros and cons and things you need to be aware of when using them. Then I'll actually compare them in detail and give you guys a summary for which ones are best for which types of situations and also which types of investors. And then finally, I'll also give you guys some suggestions on investing platforms to consider if you want to get into regular shares and ETFs. Now here's the thing though, when it comes to this, no joke, there is a lot to keep track of, and even for me when making this video, it was overwhelming because there were just so many different investing apps out there. We have CommSec Pocket, Stake, Raiz, Spaceship, Vanguard, Personal Investor, Self-Wealth, CMC, IG, all the big 4, and they're all the ones I can just remember off the top of my head. But anyway, now that I've actually looked into all of them, it's become very apparent that all of these apps really fall into either one of 2 categories. They're either super simple and good for beginner investors, or they're much more complicated to use and targeted towards experienced investors. So with this video, I'll do my best to break down and compare what I would consider the 3 most popular investing apps for beginners in Australia currently, between CommSec Pocket, Raiz and Spaceship Voyager. And actually, these really aren't just for beginners. They're great for anyone who just wants a simple autopilot solution to investing that isn't going to rip them off like most financial advisors. Because if there's one thing that I cannot stand, it's excessively high and unnecessary fees. And if you also hate fees, please join me in smashing that like button down below for the YouTube algorithm. Anyway, let's get into the video. So out of all of these investment apps, these are all what people would consider to be micro investing apps. And before jumping into the comparison, really quickly I want to give you an overview of micro investing, what it is and why it's useful. So micro investing allows you to invest small amounts of money to help build up a profitable fund. The premise is simple. If you frequently make small contributions over time into an investment portfolio, you have the potential to earn more than you would if you just saved it up in cash or in a savings account, for example. And I like this because it gets people into the habit of investing frequently in the same way you might actually dollar cost average into ETFs. Now, not every micro investment platform works the same way. Some apps actually let you invest smaller amounts than is normally allowed in the stock market, also called fractional investing, and others actually work by investing your spare change from everyday purchases by rounding them up to the nearest dollar, for example, by linking your bank account. Really, micro investing is for anyone looking for a cheap and convenient way to start building a diversified investment portfolio. Okay, so now let's get into the actual comparison between CommSec Pocket, Raiz and Spaceship Voyager to find out which one is actually the best investing app for beginners in Australia. And if at any point in the video you're actually interested in signing up for one of these investing apps, I'll leave some links in the description box below, where if you use them to sign up, for Raiz and Spaceship, you'll actually get a bonus $5 when you start investing. First, we're going to be looking at the newest app out of the 3, and that will be CommSec Pocket. CommSec Pocket is actually run by Commonwealth Bank, the largest of the big 4 banks in Australia, and was launched in the middle of 2019. And the basic premise of CommSec Pocket is that it's basically an ultra slimmed down version of a regular stock brokerage account that's targeted towards newer investors. So it doesn't actually collect spare change or round up like any of the other investment apps, but you can set it to either make regular monthly or fortnightly payments, or you can make one-off payments as much as you like. However, it does actually let you invest directly into ETFs of your choice through much smaller amounts than when you went through a normal broker. Like when you directly invest in shares or ETFs using a standard online broker, there's typically a minimum initial trade requirement of around $500 to $1,000, and brokerage fees usually hover between sort of $10 to $20. However, with CommSec Pocket, that's what really changes. You can actually start investing with as little as $50 and gradually build a portfolio over time. And when you invest via CommSec Pocket, you'll be buying units in an ETF by default, as they're the only options available. And if you don't know what an ETF is, ETFs are essentially funds that trade on a stock exchange, just like shares, except the difference is that an ETF actually represents an investment in a selection of companies and assets, whilst you only need to buy a single share or stock ticket to purchase that collection of companies. And if you actually want a bit more information on exactly what ETFs are, check out my full video, which I'll link above, on my full guide to ETF investing for beginners. So let me get the thing that we hate the most out of the way first, which is fees. With all investing apps or platforms, they usually have fees that fall into a few different buckets. The first one we'll look at is brokerage. CommSec Pocket has $2 brokerage whenever you buy or sell up to a value of $1,000 per trade, which seems pretty cheap. For any trades over $1,000, however, they'll be charged at 0.2% of the trade value. Important to note here that no matter what value you're trading, in terms of a percentage of the trade value, 0.2% is actually the lowest you will ever pay. This is because even at $1,000, 0.2% is actually equal to $2. So if you do a trade at anything less than $1,000, you're actually paying more than that 0.2% of your trade value in brokerage, even though it's a fixed brokerage of $2. So for example, if you do a trade of $500 with $2 brokerage, that's actually 0.4% in brokerage for that trade. And the other thing to note is that even as a percentage, even at 0.2%, this is actually quite high, as most full-featured stockbrokers will all actually charge a bit less than that. However, and this is important to note, this percentage brokerage is actually not too bad, because no full-feature broker is actually going to let you start investing with just $50, like CommSec Pocket does. And even one of the cheapest full-featured brokers has trades starting with a minimum brokerage of $9.50, which is almost 5 times $2. The next fee category I want to look at is around account servicing, and this is where CommSec Pocket is great. They have 0 fees for having an account. However, they will charge you a late settlement fee. Cash is actually debited from your account 2 business days after your trade is done, and this is when your trade settles and they withdraw the funds from the account. However, if you have insufficient credit or funds in your account at that time, you'll be charged a $10 late settlement fee. And the last main fee you need to be aware of when using CommSec Pocket is that since you're investing directly into the underlying ETFs, you will be, of course, charged the corresponding management fee of any ETFs you choose to purchase. But remember, these ETF management fees aren't like the type of fee where CommSec will say you owe them $5. Instead, the management fee is basically integrated into the unit price of your ETF automatically, so your actual returns will be less, whatever that fee is. So in terms of the investment options with CommSec Pocket, it's actually the most complex out of the 3 apps that we're going to look at today, as they actually have 7 different investment options and you're actually investing directly into ETFs. The selected ETFs are intended to represent specific sort of themes and investment strategies, like for example, high dividends or technology companies or emerging markets. So the 7 themes they have is the Aussie Top 200, which is through the IOZ ETF. They have Aussie dividends through SWI. Then they also have the Global 100 sort of option, which is through IOO. They also have emerging markets, which is through IEM. They have the Healthwise theme, which is through IXJ. They have the Sustainability Leaders theme, which is through ETHI. And then finally, they have the Tech Savvy theme, which is through NDQ. So if we actually compare all the different sort of theme ETF options they have, we can see they have fees ranging from 0.09% per annum to 0.67%. with total holdings from around 40 to over 1,000 depending on the theme or ETF you choose. So now in terms of the returns you could get from CommSec Pocket, it really depends on which ETFs you choose to invest in. You have a lot more control over your potential returns because of this. So for example, the highest returning option at 20% per annum over the last 5 years is NDQ, which also has a 12-month dividend of 2.72%, which is really no surprise when you see that it's full of the largest technology companies in the world, which have been really doing well over the last 5 years. Whereas on the flip side, if you had have chosen to invest solely in SYI, the dividend option, you would have had only 1.51% per annum of capital growth over the last 5 years, but with around 5% of dividend yields per year. Which I guess for even the worst possible option at 6.5% per annum total return over the last 5 years, it's actually not too bad, and a lot better than what most new investors would get if they tried picking individual stocks over the long run. So in terms of the pros and cons, if we start with the pros, first, one of the main benefits is that like many of these apps, it's extremely easy to use. It took me about 5 minutes of playing around before I knew my way around the app. And another major plus is that it doesn't try to hide where your money is being invested. You clearly understand the fees and returns and all the risks involved, all big ticks in my book. The $50 minimum investment is also a great incentive to get people interested into investing, and the $2 brokerage fee is about as low as it gets. And even though it gets higher over $1,000, there are definitely other brokers out there that are much, much worse. And you can choose whether you want to do one-off investments or schedule automatic monthly or fortnightly investments as well. In terms of cons, while the individual fees are low, if you choose to invest small amounts frequently, you'll actually end up paying a lot more in fees. So this isn't really a great app if you plan on investing really small amounts very frequently. The way I look at it, the most optimal way to use CommSec Pocket is investing in $1,000 chunks whenever you have that amount. The only other thing which I think is a slight annoyance is the options that CommSec Pocket has selected in their 7 sort of core categories, as other than a couple of the options that they've chosen for ETFs in these categories, I probably wouldn't consider the rest as sort of best in their class or best in their category, and you literally have no option here but to go with the option that CommSec has chosen. Most notably, Vanguard has been left off any of the options, so it's really something to consider here if you're going to use CommSec Pocket. So that's CommSec Pocket. Let's look at the next app now, which is Raiz. Raiz Invest, previously known as Acorns Australia, is an investing app where their unique market offering is letting Aussies invest their money through the idea of roundups. Basically, you have it connected directly to your bank account, and anytime you make a purchase, it rounds it up and invests the difference into your chosen investment option. They also allow investments via the recurring approach, so you can schedule daily, weekly, or monthly amounts and allocate those into your investments on a recurring basis. And of course, you can do lump sum investments to boost your investments with bigger once-off capital amounts. More recently, they also introduced Raiz Rewards, which is essentially the same as any online cashback site like Cash Rewards or Shopback, but instead of getting actual dollars back when you do purchases, you get additional investment funds in your Raiz investments, depending on a percentage of how much you're spending while shopping. So looking a bit more deeply into the app, the roundup feature is definitely pretty unique and makes investing really easy, especially because there aren't any transaction fees anytime it takes a spare change. The way Raiz charges fees is through monthly account management fees, which are in 2 tiers. For balances of under $10,000, you pay $2.50 a month, and then for balances of $10,000 or more, you pay 0.275% of your balance a year in management fees. Now, this is where you need to be careful and understand the real cost of this fee structure. For example, if you're a beginner investor and looking for somewhere to start with your first $1,000, well, after a year, you would have been charged $2.50 times 12 for every month in fees, which is $30, which works out to be 3% per annum in fees, which is honestly pretty insane. And what's actually worse is that many users probably start with much less than that and rely on these roundups, which means the fees in terms of percentage per annum will be even higher than 3%. In addition, you'll also be passively paying the management fees of the underlying investments of the ETFs within the Raiz portfolios. So here are some of the ETFs that they are using in their portfolios. And the fees range from anywhere from sort of 0.196% per annum to 0.418% per annum. And then moving on to the actual investment options available in Raiz, this is one of the things that I think they actually do pretty well, which is constructing pre-made diversified portfolios, similar to how diversified ETFs from other providers work, like BDHG, for example. But obviously the allocations are different here. So you sort of just choose which portfolio you prefer based on your risk tolerance and preference, and Raiz will automatically purchase the underlying ETFs based on the selected portfolio allocations. And in terms of the actual historical returns, they've been quite a mixed bag, where the aggressive portfolio has actually had the worst performance in the last 2 years. This is mainly because of the large exposure to Australian shares, which haven't really gained much in the last 2 years, whereas bonds, which are part of the more conservative portfolios, have been a bit more reliable during that same time period. Interesting to note as well that their Emerald portfolio, which is their ethical investments portfolio, has really outperformed all of the other investment options by quite a margin. So in terms of pros and cons, the main benefit with Raiz is really their roundup feature, which is what attracts most users. And since there's no fees associated with roundups or any of their transactions, it's suitable for people who want to invest small amounts really frequently. This combined with the extreme simplicity of the app make it a nice option for investors who are completely new to investing. And it's also great because it forces users to diversify into a set of ETFs, which gets people used to the idea of highly diversified portfolios. Now, sort of with the overwhelming simplicity, really, you are paying for it through their fees, which at first glance appear to be cheap and not really cheap at all. Because at an absolute minimum, you're going to be paying 0.3% per annum if your balance is under $10,000. And if it's over that, you're paying 0.275%. And I'd still consider that pretty expensive as well. So you are really paying for that simplicity and ease of use through those fees. The other big sort of con with Raiz is that you don't have any direct control over your underlying investments like you do with CommSec Pocket. You can only select to invest in their pre-constructed portfolios. So Raiz won't be a good option for someone who would like to have more control over their own portfolio and what they're investing in. So now moving on to the last investing app for beginners that we have today, which is Spaceship Voyager. This is run by the same people who brought you Spaceship Super and was launched in April 2018. They're a bit different to all the other investing apps that we've talked about today, as they are extremely focused on technology investments, which depending on your preferences can be a good thing or a bad thing. But it does mean they've had great historical returns over the last sort of few years. And if you want a simple to use app, Spaceship Voyager is by far the simplest and most straightforward to use out of the three. You can only select from 2 different investment options and set up regular top-ups each week, fortnight, or month. Then you let Spaceship Voyager take care of the rest. And in terms of fees, they're extremely low. So low that I was really digging into their PDS to see if I could find any additional hidden fees. But basically for balances up to $5,000, there are no fees at all. No account fees, no transaction fees, not even any ETF management fees that I could find, because they're actually investing directly into underlying shares. That really makes it a perfect investment tool for those of us who don't have huge amounts of disposable income, but still want a chance to invest in the market every now and then. And for amounts over $5,000, you will pay either 0.1% per annum if you choose to invest in Spaceship Universe, or 0.05% per annum if you choose to invest in Spaceship Origin, which both of these options are actually extremely low in terms of fees compared to the other apps we've been looking at today. So big thumbs up on the fees or lack of fees for Spaceship here. In terms of the investment options, like I mentioned earlier, there are only 2 to choose from. Whereas most investment apps ask you to choose from amongst a number of specific ETFs or stocks, Spaceship Voyager takes something of a middle ground approach. Specifically, the app offers 2 management funds, the Spaceship Index portfolio or the Spaceship Universe portfolio. And here's how they work. The Spaceship Index portfolio is essentially a low-cost market index fund that contains 200 of Australia's biggest companies, as well as a few major companies from around the world. And then the Spaceship Universe portfolio, which is personally managed by the Spaceship's investment team. This fund actually invests in the 100 companies of tomorrow, defined by them, taking more risks to hopefully yield higher returns. It features companies from both Australia and around the world, and over 50% of its companies actually feature from US-based companies. Now, you can't actually customize investment portfolios at all, and the funds are unit trusts. So when you invest in the fund, your money is actually pooled together with other investors and invested in the investment portfolio. You acquire units in the fund, and each unit represents a proportional benefit interest in the assets of the fund as a whole. And now the returns of Spaceship Voyager have been very good since they've started, especially when you compare it with the investment options from Raiz over the same time period. Their Universe portfolio has actually returned 23% per annum over the last 2 years, and their Origin portfolio has returned 8% per annum in the last 2 years. Both quite respectable, but of course mainly driven by their significant holdings in technology companies. So in terms of the pros and cons for Spaceship Voyager, starting with the pros, the first big pro is that it's just transparent. You can easily view your portfolio holdings through your Spaceship account at any time. Secondly, the fees are super low, like we've discussed. You'll only have to pay 1 fee, and it's super low, and that's only if you have a balance over $5,000. The next thing is that it's very simple. The investment portfolios are chosen for you, and there's only 2 options to pick from. Fourth, there's really low barriers to get started. There is no minimum investment amount, and there are no entry or transaction fees. And then finally, they've got regular investment top-ups. You can set up scheduled payments directly into your investments in Spaceship, so you can really sort of have your investments set up so they can just be set and forget. Now, in terms of cons, most of the risks associated with Spaceship Voyager are pretty much in relation to their investments. You only have 2 investment options, so you better like what they're offering, as you don't really have much choice. And like all investments, there's that market risk, and this is the risk of negative returns resulting from unfavorable investment market conditions. And really, there is a bit of country risk with Spaceship Voyager, since any area where your investment's in particular US, because there's a large sort of dominance in that area, if there's a downfall in the US particularly, you're going to lose out in that area. And just as a reminder, guys, if you are interested in using one of these investing apps, please feel free to use one of my referral links in the description box below, because you'll actually get a bonus $5 if you use them for Raiz or Spaceship when signing up. So I think in summary, if you're someone who likes a lot of control with their investments, but still just sort of starting out and don't have a huge amount to invest yet, then CommSec Pocket will be the best option for you. But if you're someone who actually typically finds it hard to save, well, the roundup feature of Raiz combined with their no transaction fees will be a suitable option for you, as they're great for people who do want to frequently invest small amounts over time and aren't really great at sort of willingly sort of transacting to invest in these options. And then finally, if you just want the cheapest fees and the simplest to use platform, well, Spaceship Voyager is going to be the best option for you. And then as long as you do like investing in technology stocks as well, it really will be a nice option. However, in saying that, I think for people new to investing looking to get started, they're actually all going to be pretty good options, and this is why. Because there really are a lot of sort of benefits with micro investing. One, it's super easy. It's quick and simple to set up an account with all these micro investing apps and link it to your bank account. And then it sort of acts as like a sort of electronic piggy bank for your spare change, which makes it really convenient. Micro investing apps really require minimal input on your part. Because the entire process is automated, you can start building an investment balance without even realizing it, for example. And it really allows you to start investing from an early age, and you can start creating these positive saving habits that will carry over a lifetime, which is a really effective way for Aussies who've never invested their money before to make a start. And then finally, really they have really minimal investment sort of requirements. You don't need a huge bank balance to take advantage of any of these micro investing apps. And you can start by investing your small change and watch your balance grow. So, and I think if you're looking to progress from micro investing, or if you'd rather just dive right into the deep end, have a look at investment platforms like Vanguard Personal Investor, which I've reviewed and done a video on, or check out Self Wealth, which is great for Aussie shares, or Stake for US shares, which are both full-featured stock trading platforms and great simple apps for new investors. And check out the referral apps in my description box below to get either 5 free trades or a free stock. So with that said, guys, thank you so much for watching the video. I really do appreciate it. And if you did enjoy the video, please smash that like button down below. And if you made it all the way to the end and you haven't subscribed yet, hit subscribe and smash that notification bell as well. I haven't really talked about this much, but I have noticed that it does actually make a difference in terms of the YouTube algorithm if you hit that notification bell and then click on the video shortly after I post. It means it does help out a lot, so if you want to be a part of the notification squad, feel free to do that as well. And then finally, leave a comment if you have any questions or you want me to cover a specific topic. And thank you again for watching the video, and until next time, peace guys.